So
yeah.
let's switch. I know what tool you're speaking about here, and 100% if you're speaking about the percentage and all this stuff. But we have also something, and I think as a swing trader, or especially as a position trader for 5-day swing trading models, we have also the chance, so we can say in percentage how successful this is, and in how many days this will be play out. Maybe Fabio, you can share this really quick with us, the 5-day swing trading model, if you're prepared for this.
Yeah, absolutely. And Kieran, that's awesome to hear your background and your perspective, because I come from a similar background. I worked in data, mostly selling data to large organizations, and obviously I've seen the change in the market from going from traditional information to more alternative and big data. So obviously data is very important. It's the best commodity we have. So that's why we created MenthorQ. So just to give you a very short background, we look at options data, and the reason why we do that is because there's a lot of information that are hidden in option markets that can actually help traders dictate the direction of the market. So we provide gamma levels on futures. So we do forex, we do gold, we do commodities, and we also provide our swing levels on stocks and ETFs. So if you're looking at futures, we also have the ETF that can give you an idea where the price could go. So for example, if you look at gold, we can provide you our swing models on, for example, GLD, that you can then apply to your gold kind of like setup, or crude oil, or indices, and so on. So what the swing model does is basically giving you like a volatility band over 5 days on where the price should be above or below. And it also gives you kind of like a back testing tool. So it also shows you over the past 35 days, how many times did the price stay above the lower band, and how many price did it stay below the risk trigger. So you can see here how also kind of like the accuracy of the level across time. And you can always go back in time as well.
And I think, Kilian, this is really important, because at the end, so I highly believe everyone needs a playbook rules based on data, so that you can copy this anytime, so that you can say, okay, I know this is having a success rate from X%, and if my market condition shows up like this, so I can play this because it's back tested, it's based on data. The same what you're doing, correct, Kieran?
Yeah, I think a lot of people have a misconception of data and how to use it, though. I do think you have to at least have some knowledge. Again, to me, it all goes back to spotting patterns and understanding patterns from a data perspective, because you could give somebody, 100%, let's say, expectancy of, a scenario playing out, and they still might not be able to make money with it because they don't look at the surrounding variables that go into that, right? And it really does take some practice and deep diving. Like, your data should, in my opinion, determine your targets and your stops in terms of, okay, from what I track and what I look at, the market has X probability of ending up here on the end of the day, and it has X probability of avoiding this area. That's half the battle, right? For example, if I'm looking to long gold, long crude, long euro dollar, whatever it may be, I want to be able to back up my long with a percentage chance of it closing higher, and a good percentage chance that it doesn't close lower. So I can say confidently, aligning with my discretionary edge where I trade levels, okay, I'm actually on the right side of the market because there's a 60, 70, 80% chance it doesn't move past where my stop's placed. And there's a 60, 70, 80% chance that it moves towards my target at least. You might not get a full 1R, you might not get a 2R, but at least you're getting these moves correct, right? And the way you execute, you can change it day by day. Like, it doesn't matter. Your system is malleable. You might trade levels. You might realize levels, you don't enjoy trading levels, so you change to trading EMA crossovers. But it all goes back to what your data is telling you to do. And if your data doesn't provide you with an edge, then you don't trade. That's how I see things anyway.
Yeah.